Crypto. Pretty easy, right? We have an established 4-year cycle. No Bitcoin pumps first, Ethereum, then your altcoins, then your dog coins, your NFTs, blow off top. Everyone perfectly sells the top, log off, enjoy your new Lambos, and come back in 4 years, do it all again. Except this cycle has not really been like that. Whereas in the cycle before, it was a lot of froth, we're gonna make it, irrational exuberance the whole way up, bada bing, bada boom, everyone makes a bunch of money in a very short amount of time. This time around, every retrace after a pump has brought out the top calls incessantly. Every move up a few percent, it's over. Every move down 2%, bear market starting. Until the next pump hits, then we're so back and then it's over again. So what the heck is actually going on? Well, it seems like there are a whole load of top signals that aren't really making the top. Again, real top signals aren't firing. So today I'm gonna break down why this is, what's going on, what you might need to be looking for when we actually hit the next local top in the market, and how this cycle has in a lot of ways already really been different. So first of all, let's just run through some of the top signals so far. Things that in previous cycles probably would have marked the top, by which I mean top signals that didn't actually signal a top here, by the way, but probably should have. This post from Merp kind of sums it all up here. ETFs launching could have topped the market, but actually the market's been consistently moving up since the launch of Bitcoin ETFs. I mean, there was that time in 2024 when things kind of went to shit for a few months, but then we went up again. Right? We'll look in more detail in a moment how ETFs have dramatically changed the situation for Bitcoin and Ethereum. But anyway, there was Donald Trump's election. We got the Trump pump, baby. Boom! Bitcoin surged up. Dog coins went up. It was a good time. We had a mini alt season, lasted for like 2 weeks, but it was there. Some altcoins actually did something for the first time in years. When Trump got inaugurated in January, that might have marked a top, but kind of local short-term top. Anyway, but although there was a prolonged dip, prices pumped again later in the year after the tariff drama was finished. January also saw the launch of the Trump meme coin, which sucked up all the liquidity off the market across Solana and really across the market in general for a few days. But even that crazy FOMO-fueled rally couldn't end the cycle. You know, it's a good argument to make. Trump launches meme coin, cycle done forever, come back in 4 years, but it wasn't the case. We've gone up to new highs since then. More recently, Ethereum has stepped up. The ETH treasury company stockpiling a ton of ETH. Tom Lee on CNBC selling Ethereum as the future of France. ETH outperforming BTC. Ducks are marrying cats. Things are crazy. Ducks, dogs, whatever. Someone's marrying cats out there. Life's thinking crazy, man. ETH BTC ratio shows that it's Ethereum's time now, which normally would signal that things are about to end and we're all gonna be in a very dark place pretty soon, but that hasn't happened. ETH keeps pumping. Things are okay. Plus, we've got the US government publishing GDP data on 9 different blockchains right now. Social signals like rap stars telling their audiences to buy crypto. And to be fair, the market has dipped recently, but would you want to call the top here, considering all those previous top signals were not really top signals? You have to look deeper in the data, okay? And if you actually look at the recent dip, what are we experiencing here? Well, Bitcoin and Ethereum have both dropped by about 13% since local recent highs. And while that's enough to take out a whole lot of leveraged longs because the exchanges hunt your asses, it isn't huge compared to the kinds of dips we've been through in the previous cycles where 30 or 40% crashes occurred repeatedly throughout bull runs. And in fact, the shallowness of the dip has actually been a defining characteristic of this cycle so far, and that might be down to the ETF effect. Quick pause here because, guys, we need to talk about how damn simple it is to buy crypto on the Crypto.com app. Now look, I have been using the Crypto.com app for years. You've been watching the channel for years, you probably know this. And honestly, it makes the process redonkulously easy. Getting started is super simple. First, use the link right down below here to go download the app. Then you need to create and verify your account, usual basic simple setup stuff. Add a payment method like a debit card, bank transfer, Apple Pay, Google Pay, they got you covered. Then all it takes is logging in with a Face ID or a passcode, tapping by, searching for the coin you want. And today, as an example, let's buy the CRO token, the native token of the Crypto.com app. So you choose your payment method, whether that's a card, crypto, fiat, you hit confirm, and instantly your CRO is in your account. It's wildly easy. No complicated steps, no waiting around. It feels as natural as online shopping or something like that, except that you actually get your coins straight away. And here's why it matters. CRO right now, it's not just another coin. It's the key to unlocking the Chronos ecosystem. DeFi, NFTs, crypto utility, it's all growing fast. So whether you're brand new to crypto or already into Bitcoin and Ethereum, paying attention to what the guys at crypto.com are doing is more important than ever. And adding CRO to your portfolio is easier than ever. And it's never had more use cases with an ecosystem. The crypto.com app cuts out the complexity, makes getting started in Chronos fast, secure, and seamless. Link down below. And thanks to the guys, of course, at crypto.com for sponsoring today's video. Now, if you take a look at this chart, you can see a major shift in the way that Bitcoin moves, starting right there from when the US spot ETFs launched in January 2024. Before that, Bitcoin was that crazy fringe asset, man. It scared off TradFi investors. It was hugely volatile, massive run-ups, crazy blow-off tops, devastating crashes, after which, we flip bearish for considerably long periods of time, multi-year bear markets. And then you run through the whole damn process again, which the price is a bit higher for the next round. But now, things are changing. After the ETFs launched, the game has matured. It's a different story now. We've had way less roller coaster style moves in the market. The price is kind of slowly grinding up and to the right. And the dips in the market have been a lot less stomach churning compared to previous cycles. And all in all, if you are a long-term hodler of Bitcoin, that's a great situation to be in. And it shows that this time has in some ways become different compared to previous cycles, but not different because it's actually kind of a repeat of the asset maturation phase that stuff like gold went through. Now, the difference here is mapped out on this chart, but it also means that we haven't really seen any real froth yet in the market. See, if you were into like NFTs last cycle, you'll probably know exactly what I mean by froth. The really wild, detached from reality kind of insanity, the wild froth that you only get in crypto where people are just making millions of dollars a day because they bought a picture of a monkey. And to which, to be fair, is exactly what we all want because it creates so many opportunities to make money. Like, for example, when loot NFTs, which are just a list of nouns. This was one of the stupidest things that you could possibly imagine. Just a bunch of words, man. Words. 420 Ethereum worth of words. One of those actually sold for that. What? It's crazy, man. That was just the start of the insanity. It got real nuts during the NFT cycle. But as Agent Chud here points out, perhaps we haven't had that froth yet because it only emerges at the end of a bubble, which means the end of the bubble's not here yet, which means we still have a lot of fuel left in the tank. It's a product of that market environment, which then implies that we are still not yet at the end of the bubble, and that this cycle has got a lot left to give you. Backing up this idea, there's a whole stack of solidly reliable top signals that are simply not firing yet. So if we check on chain, the Pi cycle top indicator, nope, not triggered. The MVRVZ score, nothing to worry about. As for social signals, stuff like the Coinbase app topping the app rankings, not yet, although back in December it did. So if you want to look for a next local top, watch for the Coinbase app to hit those high rankings. Google searches for Bitcoin and crypto, nothing, man. I mean, there's been some spikes, okay, but not close to the craziness we saw in 2021, where it wasn't just spikes, it was sustained, massive growth in interest. That all said, one search that actually did hit a new high recently is for altcoins, so it tells you where the money is going to flow when the money starts flowing in from retail. They're not going to come necessarily buy a shit ton of Bitcoin. They're going to come buying dog coins and Chainlink and other stuff like that. Taking a comprehensive view, though, CoinGlass has a long list of bull market peak indicators that you can keep track of. It contains 30 signals. You know how many have been hit so far? 0, not 1. Now, maybe not all of them are going to hit this cycle, but probably at least some of them will. You're gonna tell me 0 of hit in the top 10? No, bullshit. Let's just look again at the MVRVZ score indicator because there's something interesting going on there. You can see here that not only is it not overheated, it seems like it's acting completely differently than in other cycles. So again, is this time actually different? Well, yes and no. I don't like to use it's different this time. It's actually the same because we're entering the asset maturation phase and we're following other assets that have done that previously, which means that we have a higher for longer cycle. We saw how Bitcoin's price action has changed since the ETFs launched. The MVRVZ score indicator is acting unusually as a response to that because the buyers have changed. It's not just a retail coin anymore. It's big money. Wall Street's here. The sentiment in crypto throughout the cycle has been strange too, with everyone calling the top every time the price goes down 1%. And it's probably a lot to do with bear market PTSD and the FTX blow up. Anyone's been around for a few years, we got some trauma we got to deal with, man. And we should all go see psychologists during the next bear market. Until then, lock the fuck in and stop being a pussy. That means we need to stay open-minded about where the cycle goes from here. An extended run is a possibility while keeping tabs on the on-chain signals that matter, because you have to look at the data in front of you and what it's telling you. Not what you want to hear from it, but what it's actually saying to you. Right now, that data is all saying we got a lot of fuel left in the tank and the cycle is not over and the top is not in. Thanks for watching.